Good afternoon, everybody. This is Jim Kenny speaking for OptionProfessor.com weekly update on the markets. Before we get started, I always start out with the disclosure. Past performance is not necessarily indicative of future results, and short-term trading, option trading, does involve substantial risk of loss, is not right for everybody. Check what your clearing firm, your broker, and your good common sense before you entertain any type of trading at all. Okay, quick background on myself. If you're just tuning in, I'm Jim Kenny, a graduate of Boston College, and I've been in the investment business here for decades. I've done live broad seminars as well as webinars, educating people on the uses and risks of options, be it for limited risk speculation, be it for cash flow creators, or be it for hedging. So today I'm going to go over all the different views that I have on the markets, give you a quick update, and tell you a little bit about what I'm seeing right now. Again, this is for July the 12th and 2019. Okay, so let's get right to it because I'm going to put the S&P chart up and I'll give you a background of what I've been saying and what I'm saying right now. All right, what we've got here is we got the S&P on an all-time high and basically closed almost on the all-time high. I'll show you in a few minutes, though, the volume on a lot of stocks are not that tremendous. So I look at this as more of a lack of sellers than tremendous buying. But you can't fight the tape and you can't fight the Fed. The moving averages are under the market and rising. And while there's a lot of things right ahead, such as earnings, such as a quarter point cut, with not a half a point, and the budget deficit and the budget problems that are going to come around with the debt ceiling straight ahead, there's a lot of things that could be coming up that could change the course of events. But right now, it's a market that's moving higher. Right now, people should be enjoying the long, and there is no formation that I see right now that would indicate a good place to go short. I'll give you a quick background on what I've been saying. We went into the dump in December at 2350. The 200-day moving average was around 2750. I thought it might snap back to the mean, which it did. Once it consolidated between 27 and 2800, I thought the next logical target would be the highs of 2950 area. That's exactly what it did. I did say, though, that under certain circumstances, my sell zone, or my zone where I would be lightening up, was 2950 to 3100. I'll still hold pat on that. I think the 2950, which obviously held there and then also held here, that got broke, I think that it may run up towards 3100, but I think then it's going to be pretty extended. So I'm still pretty much thinking that initiating a bunch of long positions between here and 3100 may not be the greatest idea because, again, let's take a look at the moving averages. The valuations, again, they have to be valued on something, right? And the valuations on stocks are not getting any cheaper every time it goes up. And if these earnings come in like not that good, that is going to be a problem as well. Right now, we're about 250 points above the 200-day moving average. So that's a pretty good amount above the 200-day moving average. So that is getting a little bit on the overbought side. Right now, again, going back to the graphs, two other things that are positive for the market that happened today. One is the transportation average, which I've been telling people has not participated in this rally and was a bit of a cause for concern. So basically, as you can see, it had a big day today, up 2.5%. So transports have made a turn a bit, got above that 10.5, which it couldn't do. Now it has. It's stuck around that 6.10.7 area, which is what the former high was there. So let's see what next week brings. If we blow out 11,000, then I think obviously it's going to take a run for the 11.5, and we're probably taking a run for 3,100 on the S&P. If it stalls here and turns back down, then 30, 40, 30, 50 on the S&P might be the best case scenario. And so that would be an area of resistance. But right now, you're looking at the transports for the first time today kicking in pretty good. But it kicked in here, too, and then it went back down. So, you don't know too much. One day does not make a trend. But today it had a good day, and you can't deny that. Russell. The Russell is trading up today as well. It was up 12 points. Not a bad move, right? But it's still underneath that 1600 area, which is the big area, 1600. So again, we get above 1600, we get above 11,000 on the S&P. It's going to let a lot of credence to this rally. But again, these things are playing catch up. They're not extended. They're not even near their all-time high. See, they're 1742. We're at 1569. So a lot of real estate between here and the highs, whereas the S&P and the Dow have made new highs. So either, A, Russells and transports could play catch up, or B, we might have a correction in the S&P and the Dow. I don't think it'll stay in this divergent situation forever. Let's take a look at another thing that I'm looking at, which is the VIX. And the VIX is at 1239 today. Low is 1229. Now, again, the good news is it's under 15. As I've been telling you, when it's above 15, or around 15, the market is steady. When it gets above 17 and towards 20, the market is declining. When it gets above 20 and 25, the market is collapsing, as you can see back in December, right? And also in October had a pretty good drop too. So anyway, that's now the VIX. Good news is, again, it's under 15, which the market can have a nice rally like it did what? In March, February, March, April, right? It was under 15 the most of the time, and you had a good rally, okay? But now it's under 15 again, so you could have a good rally. 15 is a good number. If you get above 15 again, it probably will coincide with a correction. If it gets above 20 or 25, it'll coincide against a 10 or 15% drop. Some people are calling for that. No evidence of that, but you got to beware, because when the winds of change blow, you got to go with the tape. You can't be fighting the tape. But anyway, right now, the VIX is certainly confirming that we've got a pretty good situation here as far as the technical setup on the VIX. Okay. Again, one last thing on the VIX, though. It is in a neighborhood where it does hit the low area. See, right around there was a low, and then it had a drop, and then it had a rise in VIX. And then down here is the pretty much low as it's been. 1011 is about as low as it's been. And from those areas, sometimes it does have a little bit of a correction. All right. What else is going on in the world? We got next week, we've got some earnings from the banks. How did they do today? Let's take a look. Wells Fargo, which obviously is still in flux. I think they're still looking for a CEO. That was up 22 cents today. Again, nothing to write home about on that. The banks are trying to figure out if they're going to be able to make money with the interest rates where they are and the spreads being where they are. And we'll have to see what loan demand is when they come out with their reports. With regards to, let me see something else here. Okay, let's take a look at JP Morgan. That's the best of breed in many people's opinion. Is up at 120. So as you can see, a little bit more of a bid there, but still underneath the high of 119. Another one that's in the news here with people is Goldman Sachs. People think that that's going to get on the bicycle. It got above 200. I think 200 is a big number for Goldman. If it can stay above 200, I think that's very good. And it did. So it's up at 213. So once it broke above 200, you'll see it's not a bad looking stock. And if mergers and acquisitions get going and stuff, this is a company that could take off. So as you can see, the 200 area, 210, kind of a big area. Stay above this 210, and I think you're in pretty good shape on Goldman Sachs. Okay, another one, people are taking a bite out of Boeing. They think Boeing's news is getting the worst behind it. And if that's the case, then maybe they'll start actually getting orders and actually going higher. And today was doing the same. So this 350 number, 340 number seems to be the floor. And you can see 340 area, that's about the floor. So if you're buying it, you want to make sure it stays above 340. Takes out 380, you probably close that gap between 400 and 420. So there you go and look at Boeing. And it could be making a turn, had a pretty good day today, up 6 points. And of course, that's why the transports are up. Okay, let's take a look at healthcare. United Healthcare, up 4 today. A lot of people think this thing bottomed out at 230. Looks like it has. And it's been on the road ever since, well, actually 210. And then once it got above 250 again, that was back in the pink. So one big day up 10 points. Today it's up 5. Again, looks like it's definitely back on the bicycle. All the fears that was out there that they were going to, make all the home healthcare, the healthcare people, lose a lot of money, not make the earnings that they used to make, seems to be going out the window. Let's take a look at tech. Microsoft, again, that's a stock that just can't stop giving, but it is getting a little extended on the valuation side. So let's take a look at that real quick. Okay, right now on Microsoft, it's at 138.90. went up near its all-time high, but not all the way. And it was up just a little bit today. It may be running out of a little steam in this 140 neighborhood. Again, it's had a big run. Let's take a look at Amazon. That was trying to make a new high above its 2050 area. Let's see if it did it today. I didn't watch it. Nope, it's still underneath the 2050 all-time highs, but it was up 9 today, so that's not too shabby. Let's take a look at the graph. And we will see from the graph that it is, yeah, right up near, well, no, not the 52-week high, but it's up near the high that it's been, yeah, around the 2050 area. And we'll have to see if it holds. Obviously, if it takes off from here, you know, this will be the base where it used to be resistance, the 1900 area. Let's take a look at NVIDIA. I'm throwing out some names that I think look pretty interesting that could have something going on as far as right now is concerned. So NVIDIA, again, they got whacked, went down to like 130, but they seem to be back on the bicycle again. Let's see what they did today. NVIDIA was up 133 at 167. Seems to me as long as it's above 160, it's not a bad thing. Let's see where I get that from. Yeah, you see the 160 mark? Now get above 180 and then 200, and then it's back on the bicycle. There's a gap here between 180. Well, I got filled pretty good right there. So anyway, you got higher lows. That's not a bad thing. And if we can take out this number here, which looks like about 175 or so, then it might really get going. So keep an eye on NVIDIA. I understood they were involved in blockchain with regards to Bitcoin, and Bitcoin's been back on the bicycle in a big way, going from 3,000 to 12,000 or 14,000. So if that's the case, maybe NVIDIA will get a bump out of that. Facebook is the one that people are saying might go back and test that 233 high. Let's see what it did today. It had a big wash. It was up 3 points. They think it might go up towards the high that it made up there, 223. Definitely 218. So they could have a $15 move in it going into earnings. Obviously, getting above this was the big drop down to 160 was a high volume drop. So a high volume drop is sometimes, see that volume up there, a little higher than norm. That is kind of a washout sale, and then it's back on the bicycle. These guys got a ton of subscribers. Now they're trying to get into some kind of cryptic cryptocurrency. They've got a lot to work with all those subscribers. So, you know, while some people, the younger teenager guys, they don't really like it so much anymore, it still seems to have its subscribers, no matter what people say. Some people were saying a little bit about Square this week. So let's take a look at Square. That's a payment processing, and it's got a niche area. It's up 3.5% today, and some people think it might take a run at that 100 number. So keep an eye on this. Again, these are all my views, my opinions, my observations. So this is what I'm seeing. But you see, getting above 80 was a big thing. And again, if it gets some good earnings coming out here, the other payment processors, I think they're probably doing well too. I mean, Visa just keeps cooking and cooking and cooking. And there you go on Visa. And that's down a little bit today, but look where it's gone, 121 to 180. That's not a bad deal in 52 weeks on a big company like that. That's a pretty good move. How's Walmart doing? The retailers, you know, Walmart, I thought it was getting extended, but it seems to keep going. 114.60. P ratio is 40. So the one that I've been telling people they may want to take a look at in addition to Walmart is one that has a better dividend and a better valuation, and that's Target. So let's take a look at Target real quick, and I'll be able to give you something there. Yep. I don't think a Y goes on Target. Let's get rid of the Y. And here comes Target. And yeah, Target's up today. Another point, but the PE ratio, look, 15. Look at the yield, 3. Get 3% yield on your money plus 15 to 1 PE ratio. And it's a company that clearly has been doing very well. 60 to 90 is not a bad deal. That might be something to take a look at. And Ross Dress for Less, also called Ross Stores. That is another one that has been quite good. And today was good again, up 3%. And you went from 75 to 106, and it made its all-time high here today, or at least its 52-week high. I don't go all the way back on the stock. So you got retail doing good because the consumers got money. The consumers out spending money. That's why retail sales are good. Household spending looks good. Powell told you that. Powell's supposed to be cutting a point. I'll show you why he's probably going to have to cut a point. Not because the stock market's no good, not because the economy's so terrible, not because inflation is zero. In fact, it's over 2% during the last report. Not because unemployment's bad, because we just got 224,000 jobs. I'll tell you exactly why he has to do something. And that's because the market is going to bully him into doing it, because the market has already dropped its yield from the December when he said pause. See, he says pause in December where we're at 3 to 325 on the 10-year, and his pause is everyone else's buy-in. So the whole world is bought in because this guy took a pause back in November, December. Now the whole world is looking for a lot of cuts, because this is a 125 basis point drop, 325 to 2. It's a 125 basis point drop, and this guy hasn't dropped at a dime. So talk about getting ahead of your skis. This yield drop has totally outpaced either the rhetoric or the actual movements of the Fed. So the Fed will probably give you a quarter point at the end of the month just because it's so out of whack between the 10-year and the Fed funds rate. But I'm sure he's doing it begrudgingly because you know what? You only have so many bullets in that gun. And using your bullets when you got 3.5% unemployment or whatever you got, and you've got inflation back above 2, and you've got 224,000 jobs, and you've got inflation, you've got gold taking off. That's not normally the environment where you're going to do a lot of cutting. This guy's an economist. He's not running for office, and so he might get pressure from everybody politically, but he also knows that things that go up like a rocket, if you drop rates down, a lot of people are talking about the market will go up like a rocket. Well, what happened to a rocket once it stops going up? It falls, and if it falls from a tremendously high level, and let's face it, we're at a very high level on the S&P, then it's a big problem for this guy. And that's when these systemic problems start coming up. You got this, once the real estate turned over, right? And the no money loans were exposed. That's when it happens, right? Well, what do you think is going to happen if this economy grows at 1%? You're going to see all those corporate bonds and all that sovereign debt that's trading 25 trillion or something at a discount, at a negative yield. People are going to want their money back, possibly. And if they want their money back and nobody wants to buy it, and of course, if there was inflation of any type or any other reason, who'd want to buy zero negative yielding bonds, and who'd want to buy a corporate bond on a company that's balance sheet is upside down and they're giving you 2 or 3%? I mean, come on, they're getting 100% of your money. They only owe you 2 or 3%, and they've got a balance sheet that smells. So again, he's very well aware that, he's got to keep the thing going because, we are not at some kind of a low level. You have to look at the totality of what we're doing here. So I'm going to put the S&P up so you guys can keep that in mind. And it's very sunny out there. So, this is the time to look into umbrellas and raincoats, meaning what? This would be the time to learn about your hedging. If you have any questions on that, how to use puts against your stock, how to use collars where you sell calls and buy puts, how do you use married puts, how do you do replacement strategies where you get rid of your stock and you buy long-term calls? How does all that work? What's the benefit to you? What's the risk to you? If you have questions on this, the best thing to do is shoot me an email. The email to reach me at is option, OPTION, professor, PROFESSOR.com. optionprofessor@gmail.com. Okay, that's where you basically go. If you have other people who want to go to this webcast every week, you send them to optionprofessor.com and they can get the link. But to shoot me an email, if you have a question on hedging, this would be the time to look into it while everything is going so well. Because once they start not going well, your raincoats and umbrellas go up in price dramatically. Okay, so right now, this is a long-term chart going back to 1979 on the stock market. So if you came in from another planet, you'd go, well, from 79 to 92, 94, it traded between 0 and 500 on the S&P. Then in the 80s and 90s, obviously somebody must have learned about leverage because the market went from 500 to 1500 during that period. Then it had a big drop. That was a crash called .com. Then after that, it got back on its bicycle, went back up to that 1500 mark. So between 0 and 1500 seems to be the norm for most of the time since up until 2011, 2013. Now, what I see happening is as simple as this. The Fed had a big problem here with the banks going under and everything else. So they had to print money to be the bad bank. What does the bad bank mean? All the lousy loans and crappy investments went into the Fed. Okay. So they keep the rates down to 0. They force people out of money market. People have to invest, even if they're not risk takers. They got to do it because they can't live on 0 interest. And that gives you the bounce. But around here is when the Fed should have started working on the balance sheet and probably should have been working on what? Normalizing interest rates. But they decided not to do that. And all of a sudden, you had another 8 years with Obama, and there you go. You're up to 2000. Now it farts around 2000 for a while, and then Trump comes in, and what does he do? He gives away 40% of the tax revenue that the government normally gets from what? Corporations. And obviously the mass majority of it goes to wealthy and corporations. Now, what do corporations do with their money? They're supposed to what? Increase salaries. They were supposed to what? Buy plant and equipment. What did they do? They bought their own stock back. They bought their own stock back. And when they buy their own stock back, what happens? Boom. Then you rise. And so the Fed at 3,000 or at 2,900, they go, hey, maybe we should start watching the rates and maybe hike a few times here. So right now, 3,025 is the new norm. I don't think it could go to 3,500, but if it does, do you realize how much more overbought it would be at that point? So again, be careful out there on how high we get, because we're not very close to the ground anymore. Okay, and that's where hedging comes in. Optionprofessor@gmail.com. Anything in your mind in particular, let me know. Let's look at gold before we sign off here. Gold. I've been talking to you about gold for a long time. It's on its bicycle because inflation's picking up and the Fed's going to be cutting, and that's a double whammy. When inflation goes up and the rates are too low, you got problems. Deficits are going to go through the roof. Okay, I mean, we're at the late cycle and we're at all-time highs, and they're running a deficit, and they're going to raise the debt ceiling, and this deficit's going to be $1 trillion, and who knows if it won't be $2 trillion one time, if they go into infrastructure. So the bottom line is that the balance sheet of the government is a big mess, and basically that's why people are saying let's get the gold going. So once we broke above 1350, that was your buy signal on gold. Okay, now where is it going from here? Let's take a look at the longer term graph and see if we can get an idea. Paul Tudor Jones is on file saying that he thinks in the next 2 years gold's going to be one of the best investments, and that a move towards 1700 is in the cards and it could happen fairly quickly. But let's take a look at gold on a historical basis, get an idea what that looks like. Okay, so here you go. Going back on this particular contract, let's see how far we're going back. Hold on. Okay, this is a shorter term situation, and so I'm looking for all data, and they're giving me what? Let's go back on a 10-year graph and see if that'll help me. Just want to get to this gold because it is a big part of people's talking right now, and I'll show you why it should be. Okay, this one's not giving us much of a hint, but I'll give you this right now on the gold. It is a situation where 1350 is now your new floor. And let me just give you the moving averages so you can see where they're coming in at, and that gives you a little bit of idea where the support could be on the moving averages. All right, so where are you here? You're at 1250 and 1285. So you're very far away from the moving averages, and that's one of the problems with gold, and that's where there's a likelihood of pulling back towards 1300, 1350 if it gets a good reason to pull back, because it is overbought basis the moving averages, okay? So be careful of gold right here, but if you're interested on a longer term basis, 1 year, 2 year, then this is the time for you to look at GDX. I'll give you a few of them that I'm looking at. GDX is at 26. I was talking about this at 18 because I thought 17, 18 was a good buy. I thought 22, 23 was a good buy. And I'll show you why that was. Because you can see when we're down at 17, that's a low surrounded by the higher lows. That's where you take your shot. And then that's resistance here around 20. So you get above 20. So 21, 22 is a good area. Pulled back, got above 23, another place to add there. And again, on the pullback, 23 and 20, 21 should be it. And I think, it could pull back and forth, this and that. But I think if gold does have a very bright future, certainly GDX should participate. And GDXJ, the juniors, may also do as well. These are going to be more aggressive because they're smaller companies. They were up today. And you can see that they're up near their 52-week high, very close to it. They had a big run. There's a gap there at 32. Maybe comes back and fills that gap. If it does that, that might not be a bad place to take a bite. And again, if the future is bright for gold, there's a couple of things that might be worth taking a look. Another couple of stocks that might be worth taking a look: Freeport-McMoRan. If they get a deal with China, copper could come back in the picture, and copper it'd be something that would help Freeport-McMoRan. Gold and silver as well. So here you got a stock that used to be, I think, at 50 or 60, went down to 950. It is right now down here. So you can see right here, if it can break above 12, there's resistance there. So I would probably wait to see if it broke above 12 and then get on the train there. Because if it gets above 12, it'll break above that resistance there and this resistance here. So right now it's having a pullback a bit. Above 12, it might open the gate a little bit for higher prices. Last one would be Newmont Mining, which is a big favorite of the gold people as well. And Newmont Mining is up today, and you can see it's very close to it made it a 52-week high. So Newmont Mining is also a big one for the gold guys. All right, I gave you a good all around the horn here. The only other one I'm going to mention real quick, it's a commodity that may have a big future to it if these Chinese ever start buying the soybeans they say they're going to. And so I'll give you the point that I think this could turn into something reasonable. And let's go back and give you a 5. I see it's up 14, so it's already taken off. I'll give you a 5-year perspective. And this will give you a little longer term. So you can see where the potential could be if it starts to turn. Again, they had a big washout down to about $8 a bushel. Hold on, come on down here. Yeah, big washout down to $8 a bushel, double bottom there, kind of. I like to get above 950. There's a lot of action here that's resistance. There's some here that's resistance. I think if we get above 950 and then 10, I think it's got a good size future. And it wouldn't shock me if it could have a nice spike up. We have a nice thing that could look like a head and shoulders bottom here, but getting above the neckline at 950, I think is key. Again, had a good day today, up 14 cents. So keep an eye on that because I think that could be linked to a China deal as well. All right. So basically, that's what I've got for you today. I did want to invite, again, you to invite your friends to attend the meeting each week. And of course, the best thing to do, and many people, thank God, do take care of this, is they send me an email. They have a market they're looking at. They have a market they're in. They got a big gain they've got. They got a loss they've got. They got, situations they want to have protection on. They have things they want to hedge. Basically, they are looking to gather information, and they shoot me an email. And again, it's simple. It's optionprofessor@gmail.com. Okay, that's it for today. Have a good weekend, and I'll be back with you next Friday unless something big happens. Don't forget, end of the month, we've got the Fed cut. I'm looking for 1/4 of a point at best. And then basically you've got the earnings coming out next week, and they're going to start coming in fast and furious. But next week, they got a good smorgasbord of different industries. So it's going to give you a good taste of what this earnings season is going to be like. We're now extended pretty high up here at 1313. So we're going to have to see if there's going to have legs after they get some earnings reports. I'll be back with you next Friday. Have a safe and a good weekend. And again, don't forget to email me if you have any questions, optionprofessor@gmail.com. Good weekend, everybody.